Alrighty, Baloo, what a week! What a week! Are you still? Well, you were Baloo the bull last week. Are we a bear again? Where are we at? What's going on?
No, I'm incredibly bullish. There's nothing to worry about. Everybody's freaking out for no reason. We had a dip, apparently. People are calling it a dip. It didn't break any market structure. We're just back at the bottom of the consolidation. People freaking out, thinking this is the end, and I'm just not seeing it. There's nothing that's making me feel that way whatsoever. I am bullish, 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 bullish.
Looking at our two screens today, we should be coming with very different opinions.
I'm the devil on your shoulder, and Sean's the angel on your shoulder. Buy more.
Yeah,
Buy more.
we finally got a sunny day where I am, as you can probably tell. I didn't get my exposure correct beforehand, but there you go. I got the tropical shirt on, the sun's shining. Yes. So, shall we have a look at the charts and share a few ideas of what we think's going on?
Sure. Let me go ahead and pull it up. All right. So we actually just got our daily close on Bitcoin, and it's solid. Like when in doubt, zoom out. If we're here on the weekly, I just back this up a little bit. Let me go to a different chart that doesn't have all my drawings on it. BTC USD. We'll go to the Coinbase chart. This is just a test. It's just a test. Like if we're looking at the weekly, we go to the all-time high close of the weekly. We overtook the weekly level. And we test it. We're testing it currently. We have 4 days left in this test to prove that this level is valid. There's nothing bearish here at all. This is a continuation. As far as I can tell, this is just, we're fighting with this level. The bulls and the bears can't really make up their mind, but the reality is this is a long-term accumulation. We're seeing a lot of accumulation from whales. We're seeing it from all participants. Everybody is buying. I think the only problem is some people bought too much. They bought on margin. They borrowed money, and they were a little too bullish, and we had to flush out the leverage. So, just more of the same. People being degenerates and piling on more than they can handle. And there's always going to be a vulnerability opportunity for the big players to be able to push the price down, but we are bullish, man. We are bullish. There's nothing that scares me.
Baloo, on that note, if you could maybe sort of explain to people how that actually works, because if we look at the simple facts here, during this quite significant pullback, that's happened at a time where the amount of a Bitcoin and Ethereum on exchanges was at an all-time low. They're sort of bullish facts that make you think, okay, the price is only going to go up here. Now, to me, this obviously feels like, as you say, the leverage traders were taken out, and we had this cascading effect. But how does this actually work? How does the price pull back so dramatically when you're seeing net outflows from exchanges? Obviously, it's on these leverage exchanges, but could you maybe explain how that actually works? Because to people I've tried to explain it to, it's counterintuitive. There's more money coming off exchanges into long-term holders' wallets. We can see this through on-chain data, yet the price goes down 10%.
Yeah, and it comes back to the fact that not a lot of people understand how price is determined. Everybody thinks that money in equals price go up and money out equals price go down, but it's not really that simple. Price is decided on the order book. The order book is on the exchange. When there's less liquidity, the order book is thinner. That means you can mark the price up quickly and you can mark the price down quickly. So the amount of money that's actually on the order books is really, really little. And there's less and less available liquidity on these centralized exchanges, which is going to be really interesting because as we transition as a whole into decentralized finance, we're going to have to come up with new ways to make markets and decide upon price, because if all the liquidity dries up on the centralized exchanges, I just don't know how price will properly be determined. But what typically happens in these types of scenarios, like where the opportunity is for, let's say, a whale, as the funding rate increases, it's profitable to hold a short position. So a whale will open up a short position because the funding will actually pay the whale money. Um, and then the whale can actually take some of his spot holdings and flood it onto the open market and just market sell onto the order books and crash the price. So he can open up a 10x leverage position or something, 10x on Bitcoin on a short, and then go flood the spot market with some market selling and start to trigger some of those liquidations. As the funding is high, it's telling the whales, it's telling the people who are taking the other side of the trade that people are holding on to a ton of leverage. They have positions that they can't properly protect. And if we start to break down, you get that cascading effect of everybody's stop losses getting triggered, everybody's liquidations going into effect, and you get this downwards move. At which, they get to some sort of support level, they close the short, they market buy with the profits, and they've just accumulated more Bitcoin. They can sometimes even double their position doing that strategy. So you're being played. The only way to not be played is to zoom out, accumulate, play the long swings, play the big swings. And we don't have a move yet. We're still consolidating. So, as long as you're accumulating in this range, you're good. Try not to, and if you are going to take leveraged positions, take them on a meltdown. Take them when it is scary to do so, because you're not going to have a competitive edge doing it on breakouts, doing it on confirmations, doing it on higher levels and all-time high breaks. Yep. It just doesn't work.
Very good.
You got to be on the other side.
Yeah, no, that was a fantastic explanation. I hope you all followed that. Baloo and I are actually going to do some sort of training videos, so to speak, talking through leverage, how the different exchanges work. So make sure you subscribe to the channel for those. They'll also be up on the website and in his content. Now, Baloo, next question for you. We've spoken in the past about a sort of parabolic move in November, December. What is the chart telling us? Do you think we may have a prolonged bull run now, given the sort of action
So this is the $1 million question that everybody seems to be asking, and I don't have the answer, and neither does anybody else, to be perfectly honest. The reality is all possibilities are open. We can have a parabolic rise into the end of the year. I would like to not see that. I do not want to see a parabolic rise into the end of the year, because that means that this bull market is over. The blow off top will just be a signal to anybody who is, worth their salt in the trading world to take profits, hedge bets, and there will be a ton of supply that comes into the market, and your bull run will be over. So I'm not interested in seeing a parabolic rise at all. I want this game to go on for a long time. So I want to see just, price rally and react in a controlled manner, so that we can entertain the ideas of, a bull market going into Q1, maybe even Q2 or all of next year. Like, all of these are possibilities. It really just boils down to the behavior of price. And if price gets too hot, too quick, it's done. So for those, moon boys out there that just want, 10x gains overnight, sure, that is a possibility. We can get these types of gains overnight, but it would be over after that. And you're probably not prepared to handle the downside, nor do you have the skill set to know how to profit in a downside reaction. It's much better that we get something sustained. So hopefully we don't go too crazy. I would like to see us rise, obviously, but I want to see us do it in a more controlled manner, because the altcoin space is just so innovative right now. It needs some time. It needs some time to adopt. And if Bitcoin just shoots up, we're not going to get the time that we need to really develop.
I couldn't agree more. We're just in the gaming space that I'm obviously heavily involved in. We feel like we're on the cusp of these games getting better. The utility of them is improving. So to me, it would be a real shame if we scare away 80% of the market with a parabolic run and then a long bear market. That wouldn't be great for anyone at this point. Unfortunately, you have a hell of a lot of channels in the space that have been hyping this fact of this 100x in these coins for a long time now. It's quite amusing to hear their narrative in the last couple of days. Pick who you listen to, people. On that note, link to Baloo's content below. Make sure you get over and follow his channel as well. I do rate your approach to this. It's very measured. You remove the hype.
Thank you. Yeah.
Yeah.
You got to have at least one bear in your rotation. If you're on Twitter and you don't have any bears, get a bear. I'm not very active on Twitter, but you need some people to bring you back down. Yeah, I'll gladly bring you back down.
Yeah, look, I've just been looking at where a lot of development is happening. And to me, that's always such a good place to be putting bets. And at the moment, I'm seeing a lot happening on the Solana blockchain. So I took this opportunity during this dip to increase my position there. I've actually been in a leveraged long for a long time on Solana. But as you've just said at the top of the show, if you're getting a good entry, you can literally sit in those trades during a pullback without losing sleep, so to speak. What is the chart telling us on Solana at the moment?
Solana just kissed my buy zone, just kissed the very top of my buy zone. So I did not get an entry because I have my orders inside of the buy zone. So it looks like it just kissed it, and it could actually reverse off of this level. I'm still looking to pick some up anywhere between, anything under 210 would be where I would be looking to add to the position. If it doesn't happen, it doesn't happen. I've got several other, areas of exposure in the Solana ecosystem as well. So I do have exposure to Solana. This would just be an addition. If it hits, it hits. If it doesn't, it doesn't. But yeah, we're in a good spot. We overtook the all-time high, came down for a nice healthy test in the, area where institutions usually stack their orders, and we're looking to reverse off of that area. So Solana is looking great. There's a ton of development going on in Solana. It's no ETH, but it does its own thing really, really well. And I think it's catering more to the gaming side, and it's also catering to traders. It's the infrastructure that it's building specifically for decentralized order books and decentralized trade of assets is really, really good. Where they're lacking is yield farming. They just don't have as much of an infrastructure, nor do they have the same sort of setup as Ethereum or any of the EVM compatible side chains.
Yeah, I agree. Look, I'm still by far an ETH fan over a Solana, but for this particular cycle, to me, as a trade, pretty much everything I do is on ETH. I'm not doing a huge amount on the Solana blockchain, but I am seeing, just as I say, just a lot of development at the moment. You mentioned DeFi there, using something like total value locked as a metric for a trade or an investment. Do you think that's wise, or do you think it's sort of very much an after the fact type scenario when you're looking at something and saying, "Hey, look how much total value is locked in this"? Have you missed the boat when it's off the charts? What other sort of metrics do you look at when you're thinking of an investment or trade? At two very different things.
Total value locked is an important one to measure how correct you are on your assumptions. If you're looking at getting into a new chain, whether it's a side chain or a completely separate ecosystem like Solana, monitoring the amount of liquidity that's entering that ecosystem is a great measure of health. Keep in mind that liquidity can leave. So, it can be also a metric as to when something is in decline as well. I think total value locked is a good one. Another thing that I think is important to pay attention to is just the amount of projects that are copying versus innovating. So there's a lot of copycats out there. Anytime that's what, part of permissionless inside of cryptocurrency means that me as a developer, I don't need to ask anybody else for permission to copy code. I can take code anywhere and I can carbon copy the exact same product in a different place. So
more to the point, you can hard fork it, Baloo. It's what a hard one of the things that a hard fork is doing exactly that. Taking the code,
it's just
putting a different name on it, and away you go.
Forking the system and creating some new parameters. So, total value locked is great to measure, but then also keep an eye out for actual unique and different things that are coming out. And I'll just keep it as simple as that. Anytime somebody is doing something new and different, kind of pay attention to that, because that's how we kind of build. And if it's a good idea, people will fork it, people will copy it. And that's also another measure as to whether you're in a solid project. If you get into something early and then all of a sudden everybody's copying it, you're in a good project. So,
well, Olympus DAO, a big favorite of yours, and I've been looking at that closely and have taken a nice position in it. How many times has that been forked since its launch? Yeah. Many.
Yeah, Ohm is an incredibly powerful idea. And the idea of Ohm is protocol owned liquidity. So we just mentioned, total value locked, liquidity locked. Total value locked is kind of not really applicable anymore because liquidity can actually come and go. Me as a liquidity provider, I can stake. And if I'm in Solana, that's total value locked. But I can take out my liquidity and I can leave. So it's not really locked. With a protocol like Ohm, when Ohm sells a bond and you provide liquidity to the Ohm protocol, it goes in, it never leaves. That is protocol owned liquidity. That is TVL. That is value locked inside of that.
And that is actually a real innovation, as you say.
It's a real innovation that's going to have some pretty profound effects to how DeFi is structured as a whole. I think that this is just one of the best projects in the space right now. Do your own research. There's a lot of variables that go into how this asset behaves. It's got a ton of variables to it, but the idea of protocol owned liquidity is really, really powerful. And it's one of the projects that I'm most excited about currently.
Yeah, thank you for putting that on our radars. As I say, I've taken a position on it. I thought it was very early, but the more I've researched it, I've realized so far I've had about 4 billionaires that are also in there. So the cat's out of the bag on that one. It's going to be interesting to see how it plays out, but absolutely fascinated by that. So you got a bunch of other tabs up there, Baloo. What other projects should we have a look at? Oh, actually, you've got Ohm up there.
Yeah, I mean, I have it here, but it's not
really a chart.
It's not
that type of thing.
How Ohm kind of works is, price just kind of bounces off its intrinsic value. And its intrinsic value is the value of the treasury. So, I have the chart here, but it's not something that you can look at very well. But if this is like the intrinsic value of the treasury, in theory, then price will kind of bounce off of the intrinsic value of that. There's an incentive model to make sure that price doesn't fall below the intrinsic value of the treasury. But anyways, it's a very interesting project, but not one that I chart. I just have it up so that I can look at the price. A couple that I've been mentioning multiple times here on the channel, Alchemix, still in an accumulation phase. This one was just listed on Coinbase Pro, so I must be on to something. Coinbase is kind of a measure of legitimacy, in my opinion. When an American exchange adopts a cryptocurrency, they kind of need to do some sort of vetting to ensure that it's not a scam. Other exchanges don't offer that sort of assurance, I guess. Obviously, not everything that's on Coinbase could be, a project that goes somewhere, but they do their due diligence on which coins they bring on. So Coinbase now has Alchemix, which is a fantastic protocol that allows you to save and spend at the same time. If you don't know what I'm talking about, go do your own research. Because it sounds too good to be true. So obviously people think it's a scam. And another one that I've held a position in for a very long time, really, really loved the protocol as it kind of mitigates some of the stablecoin risk. There's a ton of people that are just so concerned about Tether failing and stuff like that. But they don't really do anything about it. They're not, actually actively trying to find a solution as to how you can hold stable coins and not have so much risk. Where what Meta is doing is they're minting MUSD tokens, which are beginning to pop up. You're seeing those in a lot of the DeFi protocols now. They're requesting MUSD tokens for liquidity. And what MUSD is it's a one-to-one stablecoin share of a pool that has 4 different coins in it. It's got Tether, it's got USDC, it's got DAI, and it's now it has Frax, and there's more that are going to be added to that pool. So it kind of eliminates some of the protocol risk, because if you're holding MUSD and Tether fails, you don't lose 100% of your position. You don't lose 100% of its value. You only lose 25% of its value, because the other areas of that token are going to hold their value against Tether. And if you hold it, the DAO will actually re-collateralize the pool to get everybody squared away and looking good. So if you are really concerned about holding an asset like Tether, consider using MStable. Anyways, it's been going
Baloo,
on for a long time.
I wanted to invite you on a
very
show
long accumulation. It's now starting to show some bullish price action, and this one was also just listed on Coinbase Pro. Both Alchemix and Meta are also looking to be purchased by the Olympus DAO as well. So we are seeing governance tokens and a lot of other protocols begin to be purchased by Olympus. Olympus is really taking some strategic plays in being a heavy hand in governance in how DeFi is structured. And that's another concept that I'm just incredibly bullish on. The whole notion of a DAO taking control of governance in an ecosystem. It's really powerful, because up until this point, I've been like, what's the point of holding a governance token if you're not going to vote? Where's the demand coming from? Everybody thinks that a governance token is the success of the protocol, and it's not. Now there's a bull case. There's a bull case for holding governance tokens, because the demand is going to come from the DAOs.
Absolutely. I wanted to invite you on a show next week, actually, where I've got some heavyweights from the stablecoin space. The CEO of CoinFlex, and a guy called Luke Herner, who's probably one of the foremost authorities on stablecoins. So I'd love to have you on that panel with us next week.
Sure.
So make sure you tune in for that one, people. I just think this is such the opportunity to really understand what is happening in that stable coin space, where you can get yield. Now's the time to be learning, people. Now, not in 3 or 4 months. Now. So subscribe and join us next week for that one. Okay, what else have you got for us?
Sorry, you cut out there. My earbuds are a little finicky right now. What was the last thing you said? Yeah, I've got you now. I just didn't hear the last thing you said.
I was just eager for more, Baloo. I was asking what you got for us next.
I mean, the whole space, just pick your sector. If I was to pick a sector that's going to really begin to bubble up, I would pick anything that's a DAO. I think that the DAOs are going to be the next big bubble in crypto. We can take a look at total. Total market cap. Just as I mentioned already in previous shows, we're either going to break above this regression line or come back down for a test. It looks like we came down for the test option, came down, nearly touched it. We're in a good spot. Everybody's freaking out. This is a buy the dip. This is, not financial advice, but this is a buy the dip. This is, just a little pit stop before we head up to some higher levels, in my humble opinion. I'm going to agree with that. This is I'm going to agree. Looking good for me.
Yeah. No.
Number go up. No show. Shooting fish in a barrel. Get ready.
I agree. Look, any thoughts on comparing this to the 217 bull run? There's a lot of pundits, Raoul Pal included, who's basically mapping Ethereum against what happened in 217 to the day. It's pretty uncanny how the market is moving at the moment when we compare it to November 217. Do you think that is just complete coincidence? Is there anything to this?
I think that there are a ton of similarities in human behavior, sentiment, correlation, news events. It's actually shocking to see how much correlation there is to what's going on this cycle in terms of, the influencers, the FUD that comes out when it comes out. It's remarkable to make the comparisons of 2017 to this cycle as well. So given all of the comparisons that I can draw in terms of sentiment and market behavior, it's not at all a shock that that would appear as well in the price in relation to a network effect. Ethereum can go to 20K. I think that it can absolutely follow the same trajectory of Bitcoin in the previous cycle. We can see Ethereum at 20K, and in the next cycle, we'll be looking at $150,000 Ethereum. And, the sky's the limit. These are network effects. That's one of the things that I really value from when I hear Raoul Paul speak is he is talking about, these charts are a representation of network effect, and it's the only way that you can value a blockchain is based on its users. And because we're measuring by price user adoption, this is kind of one of the first, not the first, but it's the most clear cut price to network adoption correlation that we've seen, because its value, its adoption is directly correlated with the price. And it's really fascinating to see. And I agree with him. On the aspect of network effects and human behavior. Humans don't change. In the macro, it's a lot easier to predict human behavior in terms of price cycles. In the micro day to day, trying to predict what will happen tomorrow, you can't predict what the humans are going to do tomorrow. But from a zoomed out approach, you can have higher probability outcomes that are successful in your analysis, which is why I stick to the macro and the higher time frames. And
yeah, correct.
It's looking good.
Would you say that's where a lot of sort of newbie traders often go wrong, trying to just simply trade timeframes that are just too low? Can you maybe
there's a lot of people that get into analysis.
Traders out there.
There's a lot of people that get into analysis for the first time, and they make a few key mistakes. The first mistake that most new analysts do is they think that if they learn the finer nuances of technical analysis, they can predict the future. They know where price is going to go. The reality is there's always three options. We do nothing and trade sideways. We go up to a resistance point, or we fall down to a support level. That's basically the extent of what technical analysis can allow you to do. And where you are in the macro cycle, where you are in the price expansion phase of the market cycle, can help you develop a strategy to capitalize on the overall trend. So when we're in a bull market, you're looking for bullish setups. When we're in a bear market, you're looking for bearish setups. But the ability to look at a MACD cross and expect it to jump up, and all of that's nonsense for the most part. So thinking that you can predict the future is mistake number one for most new traders. And mistake number two is being in the smaller time frame. So if you're doing a lot of your analysis in the 15-minute and less, or I would even say the hourly and less, you're up against algorithmic trading bots, you're up against quant traders, you're up against blockchain scanners, you're up against a lot of automation that is taking advantage of arbitrage opportunities and a lot of other finer opportunities in crypto, where getting 0.5% is you're done. Your goal. Most retail traders, they're not in here for 0.5%. So going up against those quant traders and those bots to try and pull 10, 20, 30% out of the market, you're at a severe disadvantage. So knowing your place, knowing the timeframes that you should be focused on, being patient with the setups, and understanding the reality that there's always, doesn't matter how bullish the setup is, there's always three options: sideways, up, or down. How you strategize with understanding those three is what makes a trader, and what makes somebody that loses a bunch of money and calls himself a trader.
The majority of the market you're referring to there.
95% of the market is what I'm referring to.
Yes, correct. Okay, how shall we round it out today, Baloo? Anything else?
Yeah. Why don't, we've talked a lot about fundamentals and stuff like that. I'm just going to share a few websites with you guys. And this one is called ultrasound.money, just kind of a metric of Ethereum and its burn ratio. Currently, we are burning 4.4 million Ethereum per year. We are minting 5.4 million Ethereum per year. So we are still in inflation, but we're a heck of a lot better than we used to be because we have the burning. And, we're burning about 12,000 Ethereum per day. This will change. This will change. We will start to burn more than we mint. The ideal situation is that we're at equilibrium. We don't want to just not, run out of fuel for the network. So we do need to issue. But we're going to probably go through some ebbs and flows where the burn is outpacing the inflation. And, taking a look at the burning leaderboards, Uniswap V2 burning the most amount of Ethereum. OpenSea still up at the top. The NFTs are just a massive amount of Ethereum burning. Tether still way up there. Uniswap V3. So Uniswap's definitely the DEX that's consuming the most Ethereum. And then just a kind of an update, we used to have Axie Infinity up there, but since the release of Katana DEX, they're way down now. They are burning. Yeah, they're below Ethereum naming service. They burn 43 ETH per day because the only thing that we had was the Ronin bridge. We used to be way up there. So that's good. In my opinion, that's good because Axie Infinity was a massive, massive contributor to the gas fees. All of these protocols, if we get Uniswap over to layer 2, if we get OpenSea over to layer 2, gas fees will plummet. They'll be way, way, way cheaper. Gas is intense, but these are short-term issues that we're dealing with here. Another chart that I want to share.
Just before you move on from that one, because I think that's such an important point for people to understand about Ethereum. Obviously there is still a net amount of Ethereum being created here, but what you're saying is with ETH 2.0, something quite important to understand is going to happen. It will become a deflationary asset. When that happens, do you think Ethereum becomes effectively a utility? You need it to do things. You're spending it as gas to operate on these different blockchains. But does it then also become the same as Bitcoin, that store of value? It's deflationary, and that is sort of Bitcoin's calling card. It's only ever going to be 21 million. The amount being produced is reducing every 4 years. Can you just quickly comment on that to help people understand what is coming up?
Yeah, so the store of value thing, we're going to have to wait and see. But know that if you are exposed to Ethereum at all in this stage of the game, that you're freaking early. There might be price volatility that goes along with that, but you're early. We're building a better system. Period. I used to think that we were building a bank alternative so that everybody in the world could participate in finance, but we're actually creating a bank destroyer. We're creating a traditional finance destroyer. We have a better product. We built a better mousetrap. All that's left is the world needs to wake up to that. The store of value thing in ETH, if we can maintain equilibrium and this becomes a deflationary or at least a stable asset, where the network effects of human adoption take over and we really, everybody starts using ETH, fantastic store of value. Or we can just look at it as a fantastic investment for your portfolio. The store of value, we'll see. But what I do know is what's happening here is, the revolution of the internet, basically, you ever watch those old YouTube videos where you go back and people are trying to explain the internet when the internet was brand new? And they're just like, well, you can send mail digitally. Well, what's wrong with the post office? That's where we are. The banks are the post office. People still use the post office, but the post office is useless and clumsy, capital inefficient. And we are creating a system that will, quite frankly, in my opinion, destroy the banks. They don't even have the opportunity to adopt and custody for us. We will kill the banks with this technology. What that looks like, I don't know. But I'm so bullish.
Yeah, correct. And before we move on, just to really solidify this point, this is why both Baloo and I are such big fans of Ethereum. It is that shake up for the way that we've done business for so long, which we all know is broken. Now, when I hear people complain about, oh, I can't mint this picture, my game is too slow on Ethereum, etc., guys, you are missing the point. Decentralization is something you need to understand. Look, we do have all these other blockchain solutions that make your game play easier and quicker, etc., but they are not going to change what is currently broken on this planet, and that's our financial system. Ethereum gives us that opportunity. That's why it's important. That's why the big boys are looking at it. That's why we love it. And you need to understand that simple fact moving forward. There you go. I've said what I wanted to say.
Yeah, we're paying a premium to be here. It's inconvenient. I get it. I spent over $200 on an Ethereum transaction the other day. It's obscene. It's obscene. It's wrong. It's broken. It doesn't work. But it's just a testament to how early you are. Ethereum is going through its broadband moment right now. Right. It's at capacity. It is at capacity. And with the layering infrastructure that we're adding to it, once it's set up, once it's there, we're never going to talk about gas again. Like, honestly, we're never going to talk about gas again because it's going to feel free. It's going to be a non-issue. You just have to hang in there and understand the greater vision, the longer term vision. Yeah, really bullish. Now moving over to our shining light, our North Star of cryptocurrency, it is still Bitcoin. If Bitcoin is doing poorly, we as a community, we as altcoin holders are doing poorly as well. We have not shaken that. It is a reality. It is a fact. Love it, like it, hate it, whatever. But when I go and take a look at the Bitcoin addresses, it doesn't matter who you are, you're accumulating. Whether you are a shrimp, whether you are a fish, whether you are a crab, whether you are a dolphin, whether you are a shark, or whether you are a whale, the amount of Bitcoin going into these addresses is increasing. We are increasing. We are accumulating more of the asset. There's no metric on chain that I can look at that's telling me we're at a top. There's no metric I can look at that tells me that we don't have a high probability of continuation of this trend. The day-to-day price in the daily quotes and what's happening on the central exchanges, there's little we can do to control the day-to-day, but the overall fundamentals and the expansion and the adoption of the network is increasing, and it's the adoption of the network that gives this network value. So number go up as far as I can see.
Absolutely. Now, you started this piece off by talking about Bitcoin being so important to how altcoins perform. Would you say it's because it's almost like a gateway drug? People, a lot of big capital comes into the space via Bitcoin. They might make some gains on it.
I don't think it does anymore.
They diversify into other projects.
Bitcoin has become.
Is that how it works?
Bitcoin has just become it's become an institutionalized asset. It's almost all the way there. But Bitcoin is it is the most secure payment network that's ever existed. And there's a ton of value to that proposition. This network has been running flawlessly, continuously for a decade. Visa can't even say that. Visa has server outages quarterly, if not more. So we have an incredibly robust financial network here that has a huge network effect. And honestly, we will be developing smart contract interactions. We will kind of bring some DeFi into Bitcoin. We're already starting to see some Bitcoin DeFi stuff with Thorchain, which is a cross-chain atomic swap decentralized exchange. So it's making its way in, and you can receive a yield on it now. If there's one thing that's going to take some of the glamour away from ETH, it's not some fucking new shitcoin that everybody's raving about. It's going to be more development on Bitcoin. So Bitcoin, it is what it is. And there's a lot less innovation when compared to ETH, but it doesn't mean that there won't be some more innovation that comes to it and kind of brings it more into the fold of decentralized finance, as it is a really good currency alternative. One of the best networks, payment networks that's ever existed, period. End of story.
Yep. Correct. It's the best hard money we've ever had in many ways.
Yeah.
It's the absolute I sort of consider Bitcoin the white paper more, almost like a piece of poetry rather than something technical. The way this has been put together, but the point I wanted to make here is it's almost the simplicity of how this works that makes it so powerful. We know exactly what we've got with this, and it just marches on. As you say, hasn't been hacked. It's had zero downtime.
Exactly.
Pretty amazing. Yeah, the newbies think it's boring. They want the 100x in the latest coin, but it is very important to your education in the space, people, that you really understand what Bitcoin is and why it's important. Because I do think it could replace the total financial system at some point.
Yeah,
I think we may wake up one day if there's something on the news that just sets Bitcoin off on a trajectory that makes what we've seen so far look minuscule. I do think that will happen at some point. Now, Taproot also been activated. Do you want to give us your thoughts on that?
Yeah, so the Taproot implementation was successful. Pretty much made no waves whatsoever. There was no even movement in price at all. Nobody's talking about it, and it shows you how disinterested most of the market is in Bitcoin. That's okay. Yep. That's fine. It is what it is. But Taproot, a really important implementation because it's going to offer a little bit more programmability to Bitcoin. It's going to allow for some more complex transactions to take place, some multi-signatures, time-based transactions. It's going to offer a lot more flexibility and the ability for these primitive smart contract-like products to be built on top of Bitcoin so that we can kind of get some Uniswap type action, whether it's between Bitcoin and a stable. It'll be really primitive. It'll be basic. It'll be nothing like Ethereum, but we're going to see some of that. Along with Taproot as well is we are making more anonymity on the blockchain, because all of the transactions that are posted to the main chain, they're all going to look the same. So whether you have a complex multi-sig transaction that's got a time-based release of funds, or you have a simple peer-to-peer transaction, they're all going to show up in the same place as a transaction that all looks the same. Now, when all the transactions look the same, you don't actually know what took place where. So it gives the whole blockchain another layer of anonymity because you can no longer speculate on what happened. So pretty cool. We've just got a big privacy boost on Bitcoin, and we just got a big programmability boost on Bitcoin. Both very bullish. And this all happened so quietly. Nobody even noticed. The price didn't move. It's just a flawless execution of a hard fork. Really, really well done to all those who contributed.
Yep. The final piece of the jigsaw for me with Bitcoin, though, Baloo, is an improvement in the what's called the Gini coefficient that basically tells us how much of the value is held by what percentage of entities. It is still way out of whack for me. It's worse than the current financial system when you actually look at how many wallets are holding what percentage of Bitcoin. But it is starting to change. If we're an analysis of Bitcoin wallets, we've seen it's actually getting to a point where people are starting to try and map it and extrapolate it forward. We've obviously only got 10, 11 years of data to go off at the moment, and you could argue only about 8 of that's relevant. But what is starting to happen is we're seeing the amount of Bitcoin be dispersed amongst more people. So the Gini coefficient is improving, but obviously not at levels I would like. Any comments on that from what are your thoughts on that little issue I have?
I don't know if it's that much of an issue. So you're worried about just sorry, you were cutting out a little bit. Too much
of the network is owned by too few people, in effect.
I mean, eventually more distribution will occur. What's nice about this kind of protocol is, a lot of people got really, really rich, and there's some centralization of the holdings, but over time that will distribute. And the fact that there's no control over that distribution, and the fact that it's been going on so long, You know, we'll get to the point where this concentration of holdings, we'll see that, you know, there's concentrations here and there that don't move for so long. It's another Satoshi address. Those aren't going anywhere, but the actual circulating supply will continue to be distributed. The miners are going to get less and less. We're going to see the currency itself used more and more. It's a really good system, and I'm not necessarily worried about those types of metrics. Again, just going back to how early we are, you know, there's not a lot of ways that you can spend Bitcoin. So that's another contributing factor as well, is once we have more infrastructure where you go in everywhere and it's just, oh, I can pay with Bitcoin, you're going to see more and more distribution as well. And the fact that Bitcoin has no leader is one of its greatest assets, because it's just the only way you can trust a system filled with humans is if there's no human to blame or point a finger at after the fact. So, you know, Satoshi, if he's still alive, which I don't think he is.
You don't think he's in court in Miami at the moment?
It's brilliant. He's living in Miami?
You don't think he's in court in Miami at the moment?
No, I do not. I think Satoshi's dead. But anyways, you know, this is just such a perfect, if ever there was a currency that could do it, meaning, you know, be a reserve currency that's outside of the control of power, it's Bitcoin. Period. End of story. End of discussion. It's Bitcoin. And it's because of the fact that we don't know who Satoshi is and we don't know if Satoshi's dead or alive.
Yep.
And we have such a network effect behind it.
We do.
This is the best shot we have, period. Ethereum's great. I am so bullish on Ethereum because I think Ethereum has an incredible shot to really, really revolutionize how we exist. But as far as the notion of us as a human species coming together and agreeing upon the terms and conditions of a financial system, it's going to be Bitcoin. That's the only shot we have.
Well, I mean, I think we have enough data to support that now. And where I'm going with that is if we look at these institutional purchases, clearly, I think we're past the tipping point with the acceptance of Bitcoin as a digital gold. Gold has not moved. We've had these inflation figures come out. Gold is up 2% this year. Bitcoin's up 130. The institutions are voting with their dollars as an inflationary hedge. So gold, $10 trillion market cap, people. Bitcoin's a fraction of that. I think that's our first target. And I think we're going to get there a lot quicker than people think.
Yeah, I agree.
There you go, kids. I think we've taught you quite a bit today. I hope you've learned something. Get over. There's a link below to Baloo's content. I'm trying to get him on this channel a bit more. We're talking about that at the moment. Also going to make some how-to guides. It'll be permanent content you can check out on the website and on his content that's coming up in the next week or two. But thank you all for joining us today. Tomorrow, I'm back with another trading show, actually, a guy who's been on the channel before, Jordan from Waters Above Crypto. He uses some very, very interesting techniques that include astrology, moon cycles, numerology, along with traditional technical analysis. So if any of that sounds interesting to you, make sure you join us tomorrow. And we'll be back here with Baloo, same place, same time next week. Thank you very much, Baloo.